We'll be streaming live on Facebook as well.
Vuma, Vuma iwe, Vuma, Vuma jaje, Vuma wazagara, Vuma wa unyane, Vuma wazagara, Vuma wa unyane.
Thank you. Thank you again for joining us today. We are very happy to have our brother, an expert in tax, to come join us today to talk to us about how to maximize our tax return in every time we are doing our tax return with the state. And we are really appreciative that our brother and expert, John Misihun, is in the house to join us. Thank you very much and
Thank
welcome
you.
on the show.
Thank you very much. Thanks for having me.
All right. Before we start, though, we would like to know more about you, and I will do the introduction in a few minutes. And let's hear our dingle. Radio La Famille. Radio La Famille.
La musique clignote.
Again, thank you very much for joining us today. We know we have our brother today, Brother John Misihun. John Misihun is one of our own brother who has the tax business in Minnesota, specifically in Minnesota. And we are thrilled to have him today. For a very small description, Brother John has a Bachelor of Business Administration and specialized in accounting in Lehman College back in 2006. He has a master's degree in nonprofit management from Hamline University in 2011, and he has been enrolled in IRS agent program, and he's a senior accountant and consultant at LKS Consulting and Advice since 2011. A firm specialized in accounting for small business, tax return, and individuals. Please welcome our brother. Again, one more time, welcome, Brother John.
Thank you very much, Ezekiel. Thanks for having me. I appreciate this opportunity to talk about tax return, specifically individual tax return, business tax return. Maybe if we can go further into non-profit tax return discussion.
Great. Well, we are at the beginning of the year, and every day people are wondering, what should we do? And we know that in the United States, it's everybody's responsibility to file a tax and to reconcile their withdrawals with what they actually owe by law to the state. And doing that exercise every year bring us to people, an expert like you, who advise, and so that we can be a good citizen in a state,
Right.
in a country where we are. But, before we start though, I know
Right.
that it's said that the avoidance of a tax is the only intellectual pursuit that still carry any reward. And that is from John Renard. So what does that quote from John Renard inspire in you? What do you think about that quote?
I think basically, John, the author is trying to say the avoidance of tax is illegal. So we have two terms in, I would say, taxology. We have two terms: avoidance of tax and evasion of tax. So avoidance of tax is a legal means to pay as less tax possible. Evasion of tax is punishable by law. So I believe the author is trying to say you can avoid to pay tax and nobody will bother you. So one of the way of avoiding tax, I'll give you just one simplest way: putting money into health saving account, for example, or setting up a company and paying dividends instead of income. You know, another way is placing your residence in a low income tax rate country so you can pay less tax. So those methods is pretty much avoidance of tax and it's perfectly legal.
Oh,
So I believe that's why the author is trying to say
all
that
right.
you can avoid tax and nobody and you still have that freedom and no government will come after you because you avoid tax.
Of course. So thank you very much for clarifying that. Sometimes we can actually defer our tax that we own based on the law today, and you still being lawfully doing it. Just like you give an example of a saving account, or putting money in a stock or in real estate or so forth. That's very great
Right.
to explain that. So we know that today we're gonna have a discussion, just friendly, to explain to anybody, and a lot of our listeners are immigrants and also a new generation, new millennial that are trying to set up a business or go forward. And there's a few of them that are working a day and doing business in the evening, and they're trying to understand what is a tax. When they're talking about tax, which one are they talking about? Is it the one that I'm doing my Uber with, or the one that I'm doing, overnight and doing my side hustle, doing the job during the day with? So can you tell us a little bit what is a tax and what should people actually file?
Uh, I would say a tax. Tax. Every country needs money in their coffer to build the country, right? So basically, I would say tax is a voluntary and compulsory contribution levied by a federal government or state on individual income tax and business profits that were generated by companies. So, meaning what? If you make income, you have to pay a contribution on top of. If you are an individual, you have to pay some contribution because you are making income. If you are business and you create or you generate profit, you have to pay some money contribution on that profit. So that money is called tax. So it's something that we need to pay. Federal government say paying tax is voluntary, but you have to pay. So tax, everybody needs to pay tax. You can avoid tax at certain level, but at the end, it's gonna come a backfire on you. So we need to pay that contribution, which is tax.
So even though the tax is a voluntary contribution, we are kind of required or mandated to pay it every year, and that's why they do
Right,
withdraw it for us ahead of time in the United States. So
right.
so that means
Let me cut you right there. Voluntary in the sense that nobody is forcing you to go and pay. You know, back in that we all immigrants. Back where we from, back in the days, they forcing our grandfather to go and pay tax. So that system is not here. So it's voluntary. You have to pay. Nobody's forcing you, but you have to pay. That's voluntary means over
oh,
there.
okay. So that makes sense now. You said that it's like a back in, if you are making a connotation to the African country where they have a colonial tax where people they pursue, they say by force you have to pay
Right,
tax.
right.
But here in the US,
They don't do that.
They don't pursue you, kind of have that obligation, but you kind of have it by law to do it, and you have to voluntarily fulfill the law requirement, correct?
Right, exactly.
Okay, that makes sense. So they don't technically gonna come after us and knock at our door that why don't you pay your tax and so forth. But there's other way they will kind of require us to pay it, right? And that lead to my question: why should we pay tax, and when should we file our tax?
So why should we pay tax? Why should we pay tax? Like I say, we need to pay tax to build the country, right? Government needs that money to do construction, to pay federal government agents, to pay state agents, so they need a constant revenue in their coffers. So that's why we need to pay tax. Now, when should we file tax? As individuals, we have up April 15 to file our tax. Now, maybe April 15 may fall on the weekend, so they give you extra 2 days, 17 or 18. Now, we have a different deadline for businesses. For S corporation and partnership, they have to file their tax by March 15th. For C corporation, they have to get it done by April 15th. For non-profit, it depends. If your fiscal year is December 31st, you have to get your tax done the 50 days after 5 months of your fiscal year. So December 31st, you have to get your tax done on May 15th. So if your deadline is, your fiscal year is June 30th, you have to get your tax done on November 15th. So we have individuals have 15, April 15, and businesses have those deadlines. So now, are we forced to pay by that deadline? No. If you feel like you're not ready, you can ask for extension. Individual can file extension. Business also can file extension.
Okay. So that leads me to my next question. You're saying, are we forced to file by that deadline, which is April 15, which is no, nobody will come after us. But then if we do not actually file it, maybe say the whole year and so forth, what is the consequence? What are the repercussions? What could be the hindering for us as an individual? How will that affect our record?
No, technically you have 3 years to get your tax done. Technically, you have 3 years to get your tax done. In the 3rd year, you definitely gonna receive a letter from Internal Revenue Service that you need to file your tax. So basically, nobody's going after you. That's what is called voluntary, right? Nobody is forcing you to do it, but they have to remind you all the time that you need to get your taxes done. Now, if you need to get your taxes done in April 15, you're not ready, like I said earlier, you can do extension for 6 months, which will cover you by October 15th. Now, it doesn't mean you're not going to pay interest. You will pay interest from April 15 until October when you get it done. You pay interest, but it will cover you not to slap you with penalties. When you do extension, it cover you. IRS will not slap you with penalties. There is a penalty call over there, failure to file tax. Failure to file tax, they will penalize you heavily. So it's always good to do extension. Now, if you don't do extension, 1 year pass, they're gonna you might end up probably paying double of what you owe originally. So that's why I give advice to my clients. It's always good to file your tax, even if you're gonna owe. Don't hold your tax. Oh, because I'm gonna owe, I'm not gonna do it. No, file your tax and make payment plan. Do you know actually IRS love that? Yeah, they love it. They work with you. If you file your tax and you make payment plan, they're willing to work with you because they need that money to finance projects, you know? So that's what it is.
Okay, so you can file your tax and you make a payment plan. That leads me to a question: why do people pay back to IRS if they were working or they were doing their side job, and then
Right.
we can find out that at the end of a year they say like, oh, I owe tax, I owe IRS this money, and that hurt my my
Right,
pocket
right,
so
right,
bad. Why?
right,
That's the question, and that is a frightening part of a lot of immigrants and people who don't understand the system. Why do they
right,
have to
right.
pay back?
So it's simple. So we call something tax liability. So meaning what? Assuming you make income 50,000, in this country we have a system called pay as you go. So meaning what? When you have a job, you fill out W-4, you give it to your employer, you tell them, I'm single, I have one dependent, or I'm married, I have two dependents. Based on that, they will do withholding on your W-2. So you pay tax on your W-2 when you have a job. So employer will pay tax, will take tax from your W-2, and every quarter will send it to IRS. So we'll send it to state. So meaning what? If you have you do the withholding correctly, there is a chance that you may not owe. You know, but if you don't do your withholding correctly, so meaning at the end of the year you are single, IRS want you to pay, for example, based on your income and filing status, IRS want you to pay on income of 50,000, IRS want you to pay a tax liability of 5,000. And at the end of the year, we compare that on your W-2, you only pay 4,000. So the taxing authority want you to pay 5,000, but on your W-2 you pay 4,000. So at the end of the year, you do the book, you do the balance. That's when you realize that you owe $1,000. So that's how we owe money back to government. So meaning you pay less than your tax liability.
Okay, so that means you pay less on your tax liability before the end of the year.
You pay less tax than what is required you to pay.
Okay.
So that's why we owe. So assuming IRS want you to your tax liability is 5,000, but because of some maneuver with your job, you didn't do the withholding very well, and you end up paying like 4,000. Then you're gonna owe a balance which is 1,000. I just wanna tell you that this is an example I'm giving, though, is not gonna be always the case. So basically, what I'm trying to explain to my people is that when IRS want you to pay a certain amount and you pay less than that amount, that's when we owe money back to the government. So that's simple as that.
Okay, that makes total clear sense that in the state they have a bracket and the income level that you need to meet before you pay a certain amount of tax, and when you make more than what you actually give during the year, then you get something back. But when you pay a little bit, you give less than what you actually owe or supposed to owe them, then you have to pay it back, right?
Yeah.
So
Ezekiel, you are a tax expert.
Huh? Yeah, I'm following you. I'm following you.
Yeah.
So now,
Yeah.
so if that's the case, though, one of the question that one of the listeners ask on the way right now in one of the platform is, how do I file my W-2, or how do I make sure that the number that I'm claiming at the beginning of the year is enough, high enough, or what should I put in it so that when I come to the end of the year, I don't necessarily have to owe, but I have to get something back or break even. What will be
Now,
our budget?
yeah. Now, I want to clarify something. In the system, in this, uh, um, in America taxation system, the system punish single people. All right. So if you are single, no dependent, no credit, and you are high income earner, you always gonna end up owing at the end of the year, no matter what. So the best way for single to do this is I advise my client if you're single, the best way is to claim zero, single zero, and then make extra withholding. You make extra withholding. There is a portion on the W 4 they give you at your job. There is a portion, I think, is line 4C, where they ask you to do extra withholding. So that's the only way you can end up not paying back to IRS. Nobody likes to pay back, you know. So that's the only way. Now, if you are head of household, meaning you are a single person with kids, yeah, you get credit for those kids. So the best way to not to pay tax is to make sure you fill out the W-4 correctly. When they give you the W-4, don't stay married if you are single here, but your wife is in Africa or your wife is in another country. No, you're not married in America. You are single. You know, when you say that you live here by yourself, but you put married, they're not gonna take that. At the end of the year, you're gonna be in trouble. So that's why people don't understand. The best thing to do is to file correctly the W-4. That's it.
The best thing to do is to file a correct W-4, and also not consider the person who is not with you just like your partner in Africa or everywhere in the world, and you're trying to get more money today by putting them as a married or number of the claim very high. But at the end of the day, well, now you have to face the reality, and then that's where the payback come from. Whatever you spend at the beginning of the year or to the end of the year, now you have to throw it back at the government, the IRS. So there you have it. We're gonna give a few minute break to our expert, a tax expert, and for people who are listening, we have a brother John Misihun, and John Misihun is a senior tax accountant and enroll agent at the IRS, and he lives in a neighborhood in Minnesota. And he is very, has expertise in tax, education in tax, and non-profit taxation. So, there you have it. We will continue in a few minutes. And coming on, we will talk about how we can actually be a good citizen and report well in tax. And at the same time, we will talk about tax credit and deduction and how all that come together so we understand the realm about tax. So next time that will diffuse our stress. We know what we are doing, and when we go to the advisor, we know what kind of question we can ask, and then we can confront our reality when we are getting our paycheck. Because there's some section on our pay stub that we don't really understand, and we just take it on like that. There's other question we're gonna ask again, but for listening to us and continue listening, and we will give you a break. We'll give a couple minute break and come back to that question. Radio La Famille. Radio La Famille.
La musique clignote.
Thank you very much for listening. We are back on live, and we have our brother John Misihun, the tax expert, in the house, and he's here educating us about tax, what are all the realm about tax, and so that to diffuse that stress within us, and so that we understand the principle of a tax in the host country that where we live, so that when we go to file our tax, we know what to expect and what to get. So the second part of our show today, we will like to ask our expert, John, Mr. Misihun, what's the difference between business tax and individual tax?
Business tax basically is a tax imposed on a profit of a business. Individual tax is a tax imposed on individual income. Now, when we're talking about business tax, we have so many entities in business. We have C corporation, S corporation, partnership, and we have also one person LLC that we call most of the time sole proprietor. Now, I just want to tell you in that business tax category, we only have one business that you pay tax really, which is C corporation. You pay tax on that business profit. But the rest of the business profit is called pass-through entity, meaning that those business, you don't pay tax on those business profits, but you transfer it to individual owning the business. Assuming you have partnership and you have 10 partners in the business and the partnership make 10,000 of profit, you don't pay tax on that 10,000. You don't pay business tax on that 10,000 profit on the partnership profit. Instead, you share the 10,000 into 10 partners based on their percentage. If they have 10%, 10%, then 10,000 will go to each partner, 1,000, 1,000, 1,000. And then with that 1,000, they can report that into the individual income. So that's why I was saying earlier, technically only one entity pay business tax, which is C corporation.
Technically only one category of a business pay tax, which is a C corporation, just like you said. But
right.
We know that, nowadays, like I said at the beginning, people do side hustle. And I have my own Uber that I have it as
right.
LLC. Or, we have association of ladies of East. Or we have a group of realtors or a group of people who are just passionate about development, and then we started our own association. Do you think those association or individual limited liability business should also file tax? And how do they file the tax separately for their own individual tax?
Yeah, so in that case, like I said, assuming you are 10 people in one particular business. Now, association, if the association is non-profit corporation recognized as a 501c3 entity, then association will not pay tax. So non-profit do not pay tax on their income, but they have to report that. Now, for profit business, you are 10 or 5 people in one particular business, yeah, you have to do tax. But because you are partner in the business and you are not C corporation, even though the business will do their tax, it's just for information purposes. When you send that tax to IRS, you will not pay tax on that profit. But instead, each individual will go and pay tax on that. For you, for example, you have some Uber gigs and you do. So when you make profit on Uber, you don't really pay tax on that profit on Uber directly. Instead, you transfer that profit into your individual tax and you pay the whole amount of tax combined with your individual income. Now, assuming you have a job, W-2 job, and you do Uber. So you have 40,000 of W-2 job, and then you do Uber. After you take all the expenses out, you make 5,000 of profit. What I'm saying, you don't pay tax on that 5,000 on Uber business right away. You transfer that 5,000 onto your individual income tax, which will add to your 40,000. That's when you pay self-employment tax on that 5,000 when you do your individual tax. So that's how it works.
Okay, there you have it, brothers and sisters of Family Radio. We are here to learn, and you are hearing directly from an expert, somebody who got certified since 2011, have been doing this in and out, and helping out all the way, and to make sure that you get what you deserve, and you are better served when it comes to tax. So we are just here discussing the topics that you people sent to the radio the whole week when we ask you your opinion. So right now, the next question that one of the listeners sent out is that, usually when she filed a tax, people talk about tax credit and a deduction. And then they will say, oh, do you have a receipt for this? You have a receipt for that? And, during the year, she's just there running up and down doing her own, how do you call it, nursing business, have her own nursing assisted living home. So, like, in that particular case, what is tax credit? Who get tax credit? What get you qualified for tax credit? And what is a deduction, expert?
Okay, so so credit and deduction, those are two major notions in American taxation. So I can say that credit reduce your tax liability dollar by dollar, while deduction reduce your income before you calculate your tax that you're gonna owe. So I'm gonna repeat that again. Credit reduce your tax liability dollar by dollar. Meaning what? If your tax liability to the government is 2,000 and you get education credit 2,000, then it reduce your 2,000 tax liability to zero. It reduce it dollar by dollar.
Yeah.
Now, deduction reduce your income before you calculate your tax you're gonna owe. Meaning what? If your income is 50,000 and you have IRA deduction of 5,000, so that 5,000 will go reduce your income to 45,000. So by doing it, you pay less tax on 45,000 than if the income would have been 50,000. So that's how those two works. So we have tax credit and deduction. In taxation jargon, we always say credit is always better than deduction. Now, we have tax credit, and we have two different types of tax credit. So we have refundable tax credit, what we call a refundable tax credit, and then we have non-refundable tax credit. I don't know if we have enough time to get into it, but if there is a new topic that you're gonna organize on that, I'm willing to intervene and bring my expertise.
Of course, we are not going to go to the refundable and non-refundable. That will be the next topic. When you are listening to us, we will discuss that, so that when you are collecting your receipt, collecting all your trip, everything, you know if that can be your refundable or not refundable, if this could be a credit or not a credit thing that you should keep. So next time you go to your tax expert, your agent, like John Misihun, you know what you bring so that they can help you. And thank you very much for coming today. We really appreciate your work that you're doing to help the community and the way you explain everything. And next time anybody has a question or want to reach out to you, how can we find you? How can we, meet you to discuss or do anything? Don't forget, if you reach out to Radio La Famille, we are all the way out there to help. And you can find us through our website. We have our email there. You just write us an email or comment on our Facebook page or social media, and we will be right there to give you all the information that you need about John Misihun so that you can file. But yourself, where can we find you or anybody find who is listening to us now?
So, our office is located on the border, Brooklyn Park and Maple Grove. The address is 71. The company name is LKS Consulting and Advice. We do accounting for small businesses, nonprofit. We can help you set up your nonprofit and get you 501c3 status. We do bookkeeping for small businesses. We give consulting advice as well. And we're located right here in Brooklyn Park at 7101 North Land Circle North. The street number is 209, and Brooklyn Park, Minnesota 55428. And number to contact is 763-300-4088. You can reach us also at our website, www.lksconsult.com. I'm thanking very much Ezekiel for the opportunity given to me today so I can explain a little bit of American taxation to my people, whoever is listening to this event that we are holding now. So it's always a pleasure to intervene and give some, clear the anything that people don't understand, and then I'll be able to help. So, Ezekiel, thank you very much for this opportunity.
Thank you very much for coming, and we really appreciate your clarification and everything we explained today. It was a crystal clear that filing in tax is not an obligation; it's a voluntary thing, but it's a must for each citizen or immigrant in this country. If you start a business, you have family, you're moving forward to have, and it's a good thing for our credit to show that you care for the country, and it's also to propel the country forward to take care of all the infrastructure that we are doing. And our brother is here to help us so that it's not necessarily that we have to owe the government. We can also get the money back. It depends on how we keep track of what we do and how we file our tax at the beginning. We encourage all of you to learn more about this, and feel free to contact our brother. And he did give his address in Brooklyn Park, Minnesota. And everybody who is listening now, the 12,000 people listening all over the world, go online and tweet this and share on your Facebook page or social media so that the people, the bare minimum people who are listening to us can also be educated and learn so that they don't make the same mistake anymore. Thank you very much for coming, and we really appreciate you coming today, and I wish you a wonderful evening.
Thank you.